There's also some new faces on the list. So again, very, very warm welcome if you're joining us for the first time. We sincerely hope that you find the insights and information shared by our speakers this morning useful, and you can join us for similar events, more of these meetups, hopefully face-to-face next time here in Hong Kong. My name is David Haynes. I manage our direct business for LexisNexis Risk Solutions here in Asia Pacific. And we've had the pleasure of hosting these meetups for about the last 2 years now since our acquisition of ThreatMetrics. We host them generally on a monthly basis in different cities around the region. As I mentioned, last week was in Jakarta. We host them in Europe and the US as well. And there are these several benefits. First up, we use them to share best practice. For those of you familiar with our broad range of financial crime compliance and fraud and identity solutions, and specifically those familiar with ThreatMetrics, you'll be aware that we have a network of over 6,000 member organizations. Those organizations have ThreatMetrics installed on their websites and on their mobile apps, and they use the technology to help them detect suspicious or fraudulent behavior in real time. And we're successfully stopping thousands of fraud attacks on a daily basis. The information is gathered, and twice a year we produce our cybercrime report. The next one will be available over the coming weeks. And if you're already on our list, you will receive a copy of that. If not, and I'd encourage you to sign up. There's some really valuable insight in the cybercrime report. Please let us know and we'll make sure a copy gets sent to you. Finally, we use these as an opportunity to invite our partner associations and clients to share their insight and experience from across the industry. And today, we're going to be joined by Wendy Ennis from Standard Chartered's Virtual Bank here in Hong Kong. And we're going to be discussing in about 30 minutes some of the trends that we're seeing, not just here in Hong Kong, but broadly across the region in the virtual banking space, some of the anti-money laundering, financial crime and fraud challenges that virtual banks will be facing. We're also joined by Cameron Church. Cameron is our Director of Market Planning here at LexisNexis Risk Solutions for our fraud and identity products. Cameron's going to be sharing with us some of the trends we're seeing, particularly related to the use of QR codes and how we can stop fraud in the fraud and identity space. Finally, before I hand over to our speakers, just a quick mention in terms of the agenda. It's obviously here on the screen. We're starting now. We'll have Cameron speak for about 20 to 30 minutes. We'll then jump over to myself and Wendy, and we'll have a conversation about virtual banking and financial crime. We'll have time for Q&A at the end, but throughout the presentation, please make full use of the question option in Zoom. It's very easy to locate, should be there on your screen. If you have questions throughout the presentation, please just type them in. They'll come through on the iPad and we can address them as we go and at the end of the presentation. So with that, thank you again for joining. We'll hand over to Cameron in Sydney. Cameron, are you on the line?
Yes, I am. Thank you, David, and good morning or afternoon, everybody, from, I guess, depending on wherever you are joining from. Just bear with me a moment while I bring up my presentation. Hopefully it works. Just a second. Okay, there we go. I think hopefully by now you should be able to see my presentation. If there's any issues throughout the presentation or any questions for that matter, we will have a Q&A session at the end of the event as well, so be more than happy to stick around and answer any of your questions. As David mentioned, thank you very much for joining us today. It is certainly our first virtual meetup, so bear with us while we get through this, and hopefully it's just as insightful as our face-to-face meetups, and we're able to share with you some of the items that we see from around the region, and some of the newer functionality that that we've been able to bring to the table, but also some of the other ways or alternate ways that some of our customers are able to use some of our existing technologies for new and exciting use cases that I find are particularly unique for the Asia Pacific region. So as David mentioned, I'm just going to go through a couple of briefings today. I'm going to talk a little bit about a unique take on a common use case, which is using QR codes at login, which is certainly something uniquely Asian and certainly something that is very unique for the ThreatMetrics solution. Second of all, the problem of social engineering appears to be a unique challenge that, or rather a uniform challenge that everyone finds throughout the region. Just as David mentioned, we were speaking last week in Indonesia, and it was certainly a common theme throughout various discussions that we had during that week. So without any further delays, I'll get straight into it and talk about a little bit about QR codes and how ThreatMetrics, or how the platform of ThreatMetrics is able to assist in this space. As I was reading through the slides earlier today, I sort of thought that perhaps this particular slide may be not particularly relevant for this audience, given that QR codes are such a part of daily life in Hong Kong and throughout most of the Asia Pacific region. But for those who are not familiar, I'm sure we've all seen something like this before. We've all interacted with something like this before. It's been around for nearly the last 30 years. Well, certainly for as far as things are concerned here in Asia. And what's unique about them is that they can be read from any angle, which is something that I certainly didn't know. Compare that to a barcode. They certainly hold a lot more information, and as we would all know, or particularly most of the audience on the phone would know, when they really started to take off here in Asia was when Tencent, via the WeChat chat app, allowed users to make payments via their in-app wallets, which certainly created a unique trend that we saw throughout the region. QR codes can be used for not only sending money between friends and family. QR codes can be, as you can see, they're used to rent bikes, can be used to purchase fruit and vegetables from open air markets. They can be used these days now to tip your waiters and in restaurants or bars, which is a unique take on QR codes. Additionally, even helping the homeless in this day and age, when it's certainly less and less likely that any of us will be carrying cash in our wallets. We'll be carrying our mobile phone, and we shift towards cashless payments. Then it becomes more and more important, or more and more relevant for those who rely on the generosity of others to potentially adopt this type of technology, and the likes of WeChat are certainly, and Alipay are certainly coming to the table and enabling that sort of technology for those in greatest need. I've even seen examples of wedding parties leveraging QR codes as part of their gift register, or wishing wells, and so on and so forth, which is unique to say the least. And it's not just the Greater China region that's leveraging QR codes as well. QR codes are being leveraged all throughout the region, as I mentioned before, from all the way from across in India to as far east as Japan, as not only the Asia Pacific market, but the globe shifts towards more of a cashless society. We're looking to various forms of technology to enable that functionality, and QR codes is just one of those. And there's a number of different use cases that we saw earlier, but also across the region, it's extremely popular way to pay, to digitally transact with companies, with individuals, and I'm sure there will be other use cases that we will see come up from time to time that we've probably never really thought of before. And this is another one that I never would have really considered before. And this is certainly been the way that, or one of the ways that that our technology has developed over a number of years has been through interactions with our customers and regulators around the globe, and understanding what some of their needs and challenges are. And they certainly over the years have brought to the table a number of unique challenges that they need to solve. And one of those challenges was last year when a global bank with certainly a great presence here in Asia wanted to launch, or was launching, their own QR payment service. But they also wanted to, I guess the twist in the challenge, or the twist in the story, was that they also wanted to leverage those QR codes to enable a seamless login process. And that certainly was a unique challenge for us to work with. It's not something that we'd done before. And so, as we would typically go, we took the challenge on and decided to work with the customer and the local regulator, as well as third-party auditors and testers and whatnot, to ensure the validity of the product. So using some of the existing features and functions that we had, I guess, in our toolkit, particularly leveraging our Strong ID for mobile, which was originally designed for authenticating payments under PSD2, using strong customer authentication. In the short period of time that's been around, that's also had some unique uses and use cases applied to it, from obviously strong customer authentication in PSD2, but also across 3D Secure 2.0 and now logins. And talking with our professional services organization and understanding how this would work, and in theory it seemed like a great idea, but it took a bit of time for them to work with not only the regulator, but also with other members of our organization, to explain how the service would work. And it's, I guess, similar to what, if for those who are familiar with the strong customer authentication process in Europe or in the UK with PSD2, there's a binding process, which is a fairly simple process of the user would log into their internet banking portal via the web and mobile, and leveraging their mobile, they would then bind their user credentials with both devices, or certainly with the very least their mobile device, and then using their mobile to scan the QR code, and the mobile having been bound to their username and leveraging the Strong ID, the strong customer authentication components that we have. In addition to that, making sure that leveraging the location information that's available, that we're able to collect from both the browser and also the end user's device, the mobile device, and ensuring that they're in, they meet the proximity rules that have been set by not only the customer but also the regulator and the third-party auditors, to say that is the device itself within the appropriate proximity to the mobile device. If yes, then allow this seamless login to occur. And as I said, it's offering an alternative approach to logging in for users that we may not be particularly used to before, and reduces the need significantly for username and password, and offers an alternate way for users to secure their internet banking process. And it is certainly uniquely, or very much unique to the Asia Pacific region, and not something that we've seen before, and certainly allows us now to leverage QR codes, or to leverage rather the strong customer authentication process or facilities to be able to authenticate users throughout their QR journey, I guess, whether it be through logins or payments or anything else that QR can do. So it's, as I said, it's extremely unique. It's not something that we've seen before, but It was successfully launched recently, and with both the regulator and the external auditor's blessings, it's certainly been quite successful for us and for the customer as well. Shifting gears a little bit now, and I'm going to talk briefly about addressing social engineering with machine learning. Social engineering is certainly a growing problem, not only here in Asia or even here in Australia. It's extremely universal. The MO that social engineering, or phishing might be another term that you may have heard, is very common, throughout the globe. The process the fraudsters take is fairly much the same, where the fraudster would call the customer. They would quite often target elderly pensioners, and they would say something along the lines of, this is Microsoft, for example, and we've detected some malware on your computer. If you would just install some software, we can help disinfect your PC. And this might be a remote access tool, for example, like TeamViewer, and the customers would willingly give access to their PC to the fraudster, who would install some random antivirus looking software that claims to clean the PC and ask the customer for a small fee for their services. And in doing that, they've effectively granted access to the fraudster to that device, and while the remote desktop session is still active, the fraudster is watching and effectively virtually listening to everything that end user is doing. And so in the particular case study that we have here on the screen, this is exactly what's happened. And in that particular takeover of that session, the fraudster will then remotely access the end user's machine, change some details of one of the beneficiaries that they were going to send money to, which was often a mule, and then try and send as much money as they could from that end user's account to that mule, in order to ultimately steal those funds and make life a little bit harder for the person that they're stolen the money from. The challenge with identifying social engineering fraud is that typically they would appear as though they are a normal customer. So we would have situations where the end user is using the same, effectively the transaction is occurring from the same machine, and everything would typically look normal. So for example, as I said, the relationship between the user and the device is, goes for a long time. They're not triggering any abnormal velocity rules. They're using their same sort of internet connection that they would typically use. And therefore that transaction would appear like a trusted transaction. I mean, comparing that to a typical account takeover where a fraudster might use another machine to log into a genuine person's account, and they would trigger all sorts of rules, including some of those that we see on the screen there. For example, leveraging mobile tethering or logging into multiple people's accounts and in a week to try and steal money. And that would appear quite easily and very much like fraud and be treated as such. Whereas social engineering, if we look across the board, as I mentioned, they're appearing quite normal. They're still using, as I said, they're still using the same end user's machine. The device that they're using and the relationship for that user and that device is quite strong, as well as the internet connection that they're using, and as such would also score quite highly. So in order to solve a problem like social engineering, we'd need to be able to understand more about that customer and more about how they interact with for example, a bank or an e-wallet provider or a virtual bank for that matter, and understanding how not only that customer logs in and when they make payments and how they make payments, but also understanding how and when they land on different pages, what they do on those different pages, how they interact with with us or with the bank, for example. Do they often use remote access tools? on their machine, or is it abnormal for them? So really understanding how that customer at each step of the way is very, very important for us. So taking that original example that I mentioned before and understanding that end user's behavior. So we would take, in this particular example, a customer would log in over the course of 6 months or a year, for example, and we would understand the history of that 200 logins and to say that this is normal activity for this particular customer. Suddenly there's a remote desktop tool enabled on this person's device, and this is abnormal for this customer. So we would identify that that particular transaction or that particular event is extremely abnormal for them in that login event. So as I said, we'd identify that and tag that as such, and we would therefore ignore the relationship between the end user and the device, as that relationship is now slightly tarnished. Understanding as well that within that same session, there's also a new beneficiary being added, and as a result of that new beneficiary being added, the bank would take the appropriate steps and provide a second factor of authentication and request a small payment. And because of that remote access session and that social engineering fraudster, saying that they're from Microsoft, and if they've gotten that far, then it's very likely that the genuine customer on the other end of the phone is going to willingly give away that two-factor authentication code. So that could be an OTP or a hard token or something along those lines. If they've gotten that far, they're extremely likely to give away that code. In that same remote desktop session, and remembering that we're gathering this intelligence at every step of the way, understanding that all of these things combined are abnormal for this particular customer, then suddenly in that same remote desktop session, there's a transfer from their savings account to their current account, which in and of itself is extremely abnormal for this particular customer. So that would also be flagged, and so we would keep track of that for the purposes of identifying, when the money is going to exit from that bank account, that this could be fraud. And then suddenly, through that same new beneficiary that they added a moment ago, all of their savings account were attempted to be withdrawn, and because they've already gone through the two-factor authentication, there's no need for them to go through that again. And being able to identify that in that same session or in that journey that we've identified that this is abnormal behavior because of so many different factors, and understanding that user's genuine behavior from previous interactions with them, we would be able to identify and flag to this particular institution that, hey, this particular transfer or this particular interaction is going to be likely to be fraud, and therefore it should be stopped. So in leveraging, that's one example of leveraging some capabilities and leveraging smart learning. Briefly, I'll go through this before we move on to the next part of the webinar. The machine learning capability has been added to complement the existing policy detection. And a model that's been developed by, again, our professional services organization, in particular our analytics part of our professional services organization, has been used to identify 60% of payments where phishing fraud is very unlikely, therefore reducing friction to good customers. So where those static rules might cause some friction, the machine learned model has been able to identify those that are genuine and not interact or not reduce and not make the interaction for the genuine customer a negative one, and overall are able to focus on general fraud detection, and they can then call out this particular policy separately. So just as an example that we've seen recently using the machine learned phishing model, there's two examples on the screen, or sorry, there are one example on the screen. The bottom example is just a very much a zoomed in version. So if we look at the Gini curve that we see here, so the red line on this particular graph is the customer's existing policy, and what it's been able to detect, where we have non-phishing events or non-vishing events being detected alongside actual vishing events. Using the machine learnt policy, we can see that the ratio of non-vishing events compared to vishing events when we get to 80% is extremely high. Rather, we're identifying 80% of vishing and only having a 1% or less false positive rate if we wanted to dial it back ever so slightly. So by leveraging machine learning and understanding not only what we understand of our customers or what you understand of your customers, leveraging this machine learning capability enables us to really ensure that yes, we detect the vishing that's occurring, but we also make sure that that percentage of customers who may get added friction by hitting these rules and not being impacted and still have a great customer experience or a great experience with your online banking platforms. Because while you might be stopping fraud, you're also unfortunately the nature of fraud prevention, you may also make the process or make the exercise painful for a good genuine customer, and therefore lose that genuine customer or that good customer. So by leveraging additional capabilities such as machine learning has certainly given this particular customer a greater ability to keep that customer experience as positive as it can possibly be. And with that, I'm going to hand the baton over to back to David, and we will shift over to the fireside chat component of the webinar. Okay, so it looks like we have a bit of a technical issue on the other end in Hong Kong. I have a couple of minutes left, and I'm going to just quickly go through some additional slides that I have that I've prepared earlier, just in case this happened. Recently, we introduced the capabilities of behavioral biometrics into our toolkit, our arsenal, our whatever you want to call it. Behavioral biometrics has been something that we've been developing for quite some time, and through an extended alpha and beta process over the last, I want to say, 18 months. We're in the process now of going to market with a product that certainly from in its initial release and even in its latest beta release was seeing some really positive results. Sorry, are we ready to go?
Yeah, I think we're ready to go.
No trouble at all. In that case, I'll hold off on the behavioral biometrics, and we'll skip back over to you guys. And if we get some time a little bit later on, I can certainly go through this if need be.
Fantastic. Thank you so much, Cameron. And thanks again, everyone, for joining. And today we have the pleasure of welcoming Wendy here to join us for the webinar. Wendy is with Standard Chartered Virtual Bank here in Hong Kong, so welcome.
Good morning. Thank you for having me.
Great. So we're going to be speaking a little bit about the emergence of virtual banks here in Hong Kong. We'll talk a little about the financial crime compliance landscape and AML and how Hong Kong has made progress, and touch on technology and how that's impacting the way banks are screening customers and becoming more effective. So Wendy, maybe I can ask you to start, if you wouldn't mind, maybe provide a brief introduction to your background and your role at the bank.
Sure. So currently, as you noted, so I'm with the Virtual Bank by Standard Chartered. I'm the head of financial crime compliance and the MLRO, and I've been in this position for about a year. Very interesting role in that we're looking to to launch a new bank. So it's been a fantastic opportunity from that perspective to be part of a project that's ultimately looking at building a new way of banking and redesigning how we look at risk. It's been a great opportunity. Prior to that, I was with Standard Chartered in a regional FCC role for 4 years. And prior to that, I was with JP Morgan, also in a financial crime compliance role. But for a lot of my career, I was also in sales and middle office as well. So I think from that perspective, it's perhaps given me an opportunity to make sure I always balance the risk with also understanding what will this mean for our customers' experience as well. So it always gives me pause for thought in terms of decisions that we're making.
Yeah, fantastic. So it sounds like lots of experience there in the traditional banking space, and now with the launch of virtual banks in Hong Kong. What do you think the advantages are to the industry here and for customers in particular?
Yeah, I think it's an exciting time for banking in general. We are seeing some, some growth of this type of model in some other countries right now. I think certainly in the UK, it's one of the jurisdictions that's really leading by example. But I think overall, people are looking for a potential new way or a new channel for banking, and we're seeing growth along that line, not just in the virtual banks, but also in terms of payment providers, et cetera. So I think we have a fantastic opportunity here in Hong Kong to start looking at the development of these virtual banks and how we can relook at supporting our customers from everything from unique ways of tying partnerships with the banking opportunities, but also helping to address areas like financial inclusion. And certainly in times like we're going through right now, it may even turn customers more to being able to manage their financial life, their financial health online. So this is it's an opportunity for us to support the industry that way.
Okay, great. And just taking a step back, I mean, Hong Kong has and remains to be a significant financial hub globally. We've seen, I think, tremendous progress in terms of financial crime compliance developments here over the years. Can we maybe just touch on, in your experience, what's changed in Hong Kong over the years? Maybe what have some of the challenges been?
Yeah, sure. So, I mean, if we look at since the adoption in Hong Kong of the mutual evaluation in 2008, there have been an incredible amount of progress that the industry has made in partnership with the regulator in terms of tackling money laundering and terrorist financing, and that's been through a strengthening of the laws and regulations, to training, consultations with the industry and regulators in terms of guidance of application of regulation, and I think that's been reflected in the most recent mutual evaluation, where FATF commented that their overall assessment was that Hong Kong had a sound regime, had made great progress in terms of fighting money laundering, terrorist financing. But ultimately, we are the sixth largest banking center for external transactions. We are an international hub for finance, for transport, and we have very strong links to China. So there are a number of areas that we need to continue to look at. We are exposed to money laundering, both internally and externally, and I think that's one of the things that the FATF mentioned in the most recent report as well, is to make sure that we enhance our prosecution of money laundering that originates from abroad. So there's still areas that we need to look at, I think, as well, addressing areas of risk from a fraud perspective, and in Hong Kong, it has a exposure to I think risk from very small scale drug trafficking, for example, to very sophisticated organizations. So we've made great progress. There's still a lot to do in that perspective. I will say, I think as well, though, the the understanding of focusing on these risks has grown, and I think that's reflected in many areas, such as the increased number of STRs that have been filed with JFIU in the past 5 years, et cetera. So I think there's certainly across the industry a real understanding of the need to address these risks.
Yeah, and we have, as you mentioned, there are multiple challenges here coming from different angles. I think we've seen, certainly in our experience, a real adoption of technology, specifically fintechs, regtechs. So many players now in the market providing different systems. As a bank, as a virtual bank, how closely are you working with technology providers to overcome some of these challenges?
Yeah, I think it's super important. I was at a conference last year, and one of the women who was hosting it, Benedict Nolans, had made a point of, if we don't start to use these reg techs, we don't start to partner with them, we won't have them. And we have, we're in a very interesting position, I think, across the industry, but in society in general, that we have this technology available, and we should start to explore how we look at the risk. And if I look at money laundering as a whole, I think we capture something like 1% of all the risk across in this industry. So there's clearly a lot of work that we as a banking industry can do to start to capture this, and we should do this in partnership with technology. I think we shouldn't assume that technology will solve all of this. There's still certainly a role for us people, and I think it's really important that we walk before we run in terms of this technology. So I think my view is you don't need to immediately run out and buy every single piece of reg tech that you hear on the marketplace, but start to look at an area that is a challenge for you. And this is even within traditional banks. Look at an area that is a challenge for you from a risk perspective, and start to familiarize yourself with some of these reg techs that are out there to see how you could start to bring them in and tackle one area at a time. Now, personally, I feel you should be looking at reg tech. I don't think that you need to be looking at it across every single area all at the same time. Get comfortable, start seeing how the power of a solution could help you in, for example, screening or transaction monitoring, and then take that opportunity to grow from there. Because I think as well, you need to convince your internal organization, and we need to also convince and make the regulators confident that we know what we're doing as well from a technology perspective. We're not placing reliance on black box solutions to identify risk, but we're doing this with a lot of care and research.
Completely, we've heard that many times. And to your point, there are so many technology vendors out there and so many challenges. I mean, how do you prioritize where you focus? I mean, is that a tough decision? I mean, to your point, convincing internal stakeholders to move. Sometimes it's a large investment. How do you sort of make a decision on where to?
Yeah, I think it depends. I'm in a unique position. I think many of us who are at the virtual banks are in a uniquely fabulous position, that we have an opportunity to kind of start from scratch in some of these areas. Those of us that are part of larger organizations can still work with traditional providers and supplement it with reg tech, but we also have the opportunity of putting a business case to say, hey, let's do something different. But I think even at traditional banks, I go back to, we don't need to boil the ocean here. Look at an area that is causing challenges or impacting your P&L from a risk perspective, and go at it from that perspective in terms of building a business case. I have spent time in the front office. It comes down to a P&L, and I think very strongly that what we're doing from a risk perspective should definitely be owned by the product organization, and you should be part of that conversation to talk about how, hey, if we start looking at other ways of understanding risk in partnership with RegTech, it could impact our bottom line from this perspective, and also give confidence to our customers from this perspective. So I think we shouldn't be looking at it just from a cost of compliance and attempting to solve for that in our own world, but partnering with the business early to start those conversations.
And we've spoken about regulatory technology and reducing that regulatory risk. On the flip side, there is a huge advantage of using technology to create a more frictionless experience for customers, for retail bankers. And obviously this has led to the launch of virtual banks and increasing financial inclusion and so on. Just looking into the future when the bank launches, what do you think the advantages are to consumers there of using a virtual bank?
I think when we look at virtual banks, we look at digital banking offerings, yes, we want to see how we can contribute from a risk perspective as well to a frictionless experience. And so basically that talks about straight-through processing. What information do we have readily available that could be seen as a golden source of data? So for example, a Hong Kong ID. And how can we partner with ID and V providers? How can we partner with list providers, et cetera, to build a model that will encourage straight-through processing? So when the closer we can get to 100% of STP, the better it's going to be for a customer perspective. But there still is going to be that risk, and we shouldn't be necessarily focused on just getting to 100%, because we should be looking at the risk that could come from people that are breaking and have appropriate controls to stop that journey and look at it accordingly. So I think there's a real balance there, but there's a real opportunity of designing a workflow where we can start to collect information from a customer that allows an STP, and then perhaps focus more on this is who they said they were, but who actually are they? Because I'm looking at behaviors in terms of how they're using their bank accounts. And I think that's the real power in terms of us as an industry partnering with RegTech to be able to look at how people are actually using their bank accounts to spot that risk.
Okay, great. We're seeing trends whereby as many of our e-commerce clients are using behavioral biometrics to sort of track user behavior and gather many different data points, allowing them to spot sort of suspicious or fraudulent transactions in real time. In the future, do you think banks will be leveraging this sort of behavioral data to maybe update their risk-based approach, possibly in real time or on a more regular basis?
I think so. I think that's where we want to, if we can get to more of it. So if you look at transaction monitoring, it is post facto. And of course it is, because we want to look at patterns of behavior. But we also want to look at how we can use technology to start to spot some of these risks more real time. So I think using technology to be able to look at, use biometrics, use behavioral data more on a real time basis is only going to strengthen the industry. I think Hong Kong as well, and it's partnerships through organizations like FIMLET, and the ability to share this information across where we see risks, to share information across other banks is just going to strengthen the industry.
Okay, great. And again, we've seen many fintech companies emerge. Many of them start very small. I remember 4 or 5 years ago, maybe a little longer, I think some of the banks were quite nervous about fintech sort of emerging, but have now sort of embraced them and set up incubators to nurture that talent. It's a fantastic space. I'm curious, how are you sort of sharing information and identifying the challenges of tomorrow, or the technology of tomorrow here in Hong Kong?
I think that probably depends on the company, depends on the individual. I think there's, so if I talk about from an industry perspective, and one thing that Standard Chartered is doing in partnership with other banks is create forums where there can be the opportunity for these fintechs to come in and present on a solution. And we typically want to do that in partnership with the bank that has actually found a use case, because it goes back to my earlier comment. If we don't support, if we don't talk about it, we are at risk of not having these fintechs available. I think we all need to do our own research, understand what our pain points are, understand what our areas of risk are. We need to get out and meet with these fintechs. It needs to be quite a proactive, kind of a proactive relationship to get out and start talking to these fintechs. I don't think there's any one way to solve for kind of that level of engagement, but my view is if we are finding a use case in working with the fintech and we're keeping it to ourselves because we think that that is our our identifier or our winning secret sauce, then we got a problem with our business model.
Yeah.
If we found something that has helped us from a risk perspective, we should be telling each other about it, because we should be focused on making the industry stronger. So, you know, I'd encourage anyone who's found success with a RegTech to share that across the industry, to tell other people about those use cases, because it encourages, it helps the business, back to the conversation about the business case internally. If you go to a CEO and you say, well, this virtual bank or this traditional bank is using this solution and has found, it gives comfort, right? It'll give comfort to our regulators if we're sharing across the industry of successes that we're having. So I think I really encourage all of us to be talking about the positive experiences that we're having in terms of
we're just, and I suppose Hong Kong as a whole is sort of just raising the bar and increasing that level of best practice across the board.
They have to.
Fantastic. You mentioned earlier maybe a reluctance to use that black box approach. Sort of reminds me of artificial intelligence and machine learning. You know, there have been numerous conversations recently around reducing the number of false positives through artificial intelligence, machine learning, and so on. How are you leveraging that sort of technology at the moment to, I guess, reduce some of the manual work that used to happen a few years ago?
Well, I'll talk to kind of where I think we should go, having not launched yet. So where we should go. So we shouldn't rely on technology blindly. Yes, we should absolutely be looking at reducing false positives. We don't want to miss the forest for the trees, and clearing false positives takes up human capital, right? Who should be looking at the true risk. So we need to strike a balance of that perspective. I think there's an opportunity to look at it from a white box approach, right? Which is what a lot of the fintechs are offering. So we'll give you a recommendation of what you should do, which will make it faster for your humans, for your workforce to be able to clear those alerts. But you can see how we've made those decisions from a decision tree perspective. We have an obligation to understand how that is happening. That stuff will continue to evolve, because the machine should be learning as we go, and we should understand, okay, we're now starting to see these themes of risk, and so our decision tree needs to change based on that, and that needs to be a very interactive type of conversation. So I guess my point is less black box, very focused on white box. You should understand that decision tree, but we should start to put in those decision trees to help us comb through all of the false alerts that we get, so we can really focus on the true risk that is coming into the banks and the industry.
Okay, so sort of updating that, the way it's configured and the rules engine in real time more effectively.
Yeah, I mean, we're still accountable. I'm still accountable for the risk that comes to my bank, regardless of what technology that puts in. So I need to make sure I understand that. And I think anybody who's an MLRO will understand that, and we need to make sure that, you know, when we're talking to the regulators as well, that we're very clear on, by bringing in this technology, to enhance. It's not to replace.
Of course. And I think you mentioned at the beginning, we're capturing maybe only 1% of money laundering at the moment. I would imagine through the use of monitoring in real time more and leveraging some of this technology, maybe that'll hopefully increase to, you know, 2, 3, 4, 5% over time.
I think we hope so, and this isn't unique to the virtual bank space. A lot of traditional banks are doing fantastic work in terms of the use of technology to start to look at this. Again, it's that partnership across the industry and with the regulators that will help to solve for that. So I don't think it's uniquely from a virtual bank perspective. But we need to, you know, as virtual banks, we need to make sure that we're working together as active partners with the banking industry, with the traditional banks.
Okay. Just changing gears slightly, let's talk a little bit about technology providers. We talked about there being so many to choose from and select at the moment. Are there any challenges you see working with so many, or is there something in particular you look for when identifying a technology partner?
Yeah, I think for me right now, it's less about the number of providers that we're looking to use. And it's more about, you know, these reg techs, they're new, right? And, you know, I think when we're looking to implement these solutions, we're also looking at doing things in a new way. So I think we need to be realistic about what we're getting from the reg techs and understand that it absolutely is a partnership. So if you take a traditional provider, they can come in, bring it out of the box, lay it down, it works. When you're working with a fintech, it won't be as seamless, right? They typically have very smart people and really smart technology, but whether or not they also have the experience in the industry, right? So they, you know, if I look at it from the legs on the table, they may not have all of the legs on the table, and so you need to help supplement that, and that's a good thing, right? I want smart people who are going to challenge me. I want technology that's going to work. I'm okay if I need to work with them to, you know, bring them up to speed in terms of, well, this is really the risk I see as a practitioner. I'm okay with that. I think it's really important to find a provider who has, from a practical sense, developers close by. Right? There's a lot of providers out there that have their developers, you know, in Hong Kong or in China, but there's also ones that have in Europe. That can work as well, as long as you have really clear lines of communication. So for the reg tech that we are using for transaction monitoring, we've been quite lucky in that they've been able to bring people in-house as we needed to have those levels of conversation. So I think those are just some of the practical things that you need to think about. If you want to do something new, don't assume it's going to be easy and seamless. But on the flip side, you will be able to have a more of a customized solution, and the solution that can grow as you grow and you understand. So not without its challenges, but lots of opportunity.
Okay, fantastic. We've certainly heard similar stories. I mean, other banks we've worked with, e-commerce companies, really do need that local presence and appreciate people on site. You know, historically, we've seen banks adopt a technology or a provider and stay with them for many years. Do you think there's a challenge in having to reconfigure or change your technology stack on a more regular basis now? Does that present, I know it presents opportunity, but surely is there some risk there as well?
Look, without a doubt, it's expensive to change technology, and the older the technology is, the more expensive it is. And I think that's where, for the virtual banks, perhaps we're in a unique position where we are looking at building out new technology, where we have a more up-to-date technology stack, for example. So it's easier to bolt on. From a traditional banking perspective, some of the challenges that they may have is, you know, trying to replace technology. It's expensive. But I think, like anything, there's ways around it. And I think traditional banks and virtual banks, it's all about making that investment, finding that area that you want to make the change in, and not trying to boil the ocean, and looking at ways to partner, perhaps with fintech, have an overlay of machine learning, or you know, you don't necessarily need to completely overhaul a transaction monitoring system, for example.
Okay, great. Before I move on to the next question here, do we have any questions from the chat? Thank you. See what we have.
Find a new
I'm trying. There's some great questions here. Thank you all so much for sending this through. Okay, here we go.
Can I just say I reserve the right to say I don't know?
If you please don't feel pressure to answer, but what are the minimum compliance initiatives or procedures a fintech or startup should put in place when launching a business?
From a virtual bank perspective?
So I think this is more for a fintech or startup, and I'll answer the question here. I mean, I think some of the fintechs and startups we've worked with recently, they have maybe they've approached us a year in and asked about AML technology, because it hasn't always been the first thing they've thought about. And maybe they're going for additional funding, and they've been asked questions about their compliance procedure and process, and they have to put that in place. So I guess it's a general question. I mean, from your perspective, what should a startup or someone involved in fintech be doing from day one?
Yeah, look, it's a slightly complicated question. Thank you, whoever submitted that. I will say it depends, and sorry that that's not a, so it depends. What you don't want to do is build a business and overwhelm yourself with policies and procedures before you understand what it is that you need to have in place to go after your target segment. And sometimes these fintechs start off with 2 or 3 people, and they're focused on building out the solution, the technology, and you don't want to overwhelm yourself with all of that framework below that you may not need. What you do want to have in place is basic standards around things like audit trails, basic standards around retention of information, an understanding around things like data privacy. If you are going to be selling into an FI, you want to understand what the challenges of an FI are and how you would address those challenges. You also want to understand the regulation. So that doesn't necessarily mean that you need to apply that regulation to yourself. Depends on, I guess, how you're coming into. Maybe this is more of a question for a legal expert, but I think you want to have I think it's more about having an understanding of the framework that whoever you're selling into has in place. But definitely you should ensure that anything that you're doing in terms of communication back with your customers, that you have a policy around data retention, that you have a strict guidelines and understanding of things like data privacy. You have an understanding of cybersecurity, because obviously any information that you're working with your customers on, you need to make sure that you're protecting yourself, but also protecting them in terms of information that they share back. So I'm not sure if that answers the question, but just some food for thought.
Okay, and I think a slightly easier, straightforward question here is, how has compliance strategy evolved at Standard Chartered since you joined the bank?
Well, I mean, when I joined the bank was right around the time that Standard Chartered was going into, it had some, it had a monitor in place, et cetera. So, I think at the time, and it was similar to my time at JP Morgan, there were a lot of banks that were in a, they had run into issues from a regulator's perspective. They were reacting to that, so very reactive to ensuring that they had appropriate controls in place to address the findings that the regulator had found in terms of weaknesses in their program. I think from a Stan Chart perspective, they've done some fantastic work over the past 5 years that I've been with Standard Chartered. And so, they've also continued then to move into more of a thought leadership perspective in terms of how we are as a company approaching helping to strengthen the industry. In terms of strategy, I don't know that the strategy has necessarily changed in terms of we want to make sure we prevent support of bad guys and bad girls in the industry, right? We want to strengthen the industry. We want to make sure that we have appropriate controls in place. That's core, and that hasn't changed. But I think, ourselves and a lot of other banks have come through a learning curve of the gaps that we had in place, and are now, continuing to strengthen the industry through outreach, through thought leadership, et cetera. So I'm quite proud from a Stan Chart perspective to see all the work that we're doing around prevention of human trafficking, around the wildlife, the risks that come with wildlife trade, et cetera. So I'm quite proud from a Stan Chart perspective of that. And I think, if we look at the very obvious development of Stan Chart applying for a virtual bank license, is obviously that focus on next step as a bank as well, that also shows maybe not a change in strategy, but an embracement of a new model and how we can look at addressing those risks within a new model as well.
Okay, great. We have one more question.
That wasn't
here.
an easier question, but anyway.
Sorry, I apologize. Okay, I know you're more focused on financial crime compliance, but we have one here on fraud. Now we are seeing certainly with a lot of the banks we're working with, we are starting to see sort of emergence between fraud challenges and financial crime compliance. Well, firstly, are you seeing the same thing as Standard Chartered, or do you expect the same thing? And with the launch of a virtual bank, I would imagine that you expect to see maybe more fraudulent applications. It seems easier for fraud to apply for.
It's inherent in the channel, right? The non-face-to-face comes with additional risks from a fraud perspective. They're two separate risks from my perspective, but they're, of course, intrinsically linked, right? And so, you know, I think some organizations have started to bring fraud and FCC within the same banner. Some haven't. They'll still keep it as two separate, you know, kind of risk framework. It's two separate risk framework owners, which is fine. I think the key is that we work together across fraud and FCC, because there's some information that is collected from a fraud perspective, especially in a non-face-to-face channel, that I need to be confident on. You know, so for example, verification of ID. I need to be very comfortable that the controls that we have in place from a fraud perspective up front to manage that risk, I'm comfortable with, because I'm the risk owner of the collection of that data ultimately from a CDD perspective. Look, I think we're seeing a lot more challenges from a fraud perspective as technology increases. We get smarter, but we're always learning from what the fraudsters are doing. We're seeing challenges with, you know, I think across the industry, from things like forgeries, deep fakes, etc. And so it's really important, again, to work with a provider, and this goes back to the conversation about, you know, continually evolving, right? It shouldn't be a binary set of controls that are in place. As the fraudsters learn new ways to get in, our technology needs to advance to learn new ways to spot those themes. So look, we are very much, there's a lot of information that's connected from a fraud perspective that we should be aware. We should be looking at things like money mules. We should be looking at things, you know, we had a rash of CEO frauds across the industry a few years back, so we should be looking at how we collect that type of information, and when something happens from fraudulent, how do we make sure that we notify the FCC department so that they can start looking at. Same thing, if we know from an FCC perspective, for example, that we have dormant accounts, do we share that information back to the fraud department so that we can work together to make sure that we're looking at that risk holistically across our bank?
Okay, fantastic. I mean, that's, you mentioned money mules there. It's certainly a trend we're seeing across the industry. Cameron earlier spoke about social engineering as well, huge challenges there. Across our network, we see you know, the evolution of fraud on a daily basis. I think there's huge benefit. To your point earlier, the industry sharing that information to a degree and hopefully stopping it over time. I think the final question, I think we're probably drawing to the end now, but the final one here was on really testing the effectiveness of systems. And I know this is something that you know, the HKMA are on top of, the regulators are on top of. What does that process look like in terms of constantly monitoring and making sure that, you know, everything is working as it should be?
I mean, it goes back to old school 3 lines of defense. Some things we don't need to reinvent the wheel on. So I think, you know, with the virtual banks, we are still under the exact same framework in Hong Kong as a traditional bank. However you manage your 3 lines of defense, there are controls there should be controls along the way. So the first is making sure when you're designing your product that you understand that you're building out a product that has appropriate controls, and your people in the front line understand what the risks are, what the red flags are, and how to identify it and how to escalate it when they see it. From a second line perspective, of course, especially when you're using new technology, you should be so hands-on in terms of regular tuning, looking at over-alerting, under-alerting, and so that should become part of your BAU work. You're not looking at your rules every 12 months, every 18 months. It's going to be much more dynamic as you start out. But then, you know, again, old school, you should still be having your quality assurance within your second line. Yeah. And then your third line of defense. Very rigorous audits will be taking place, if they haven't already, across the virtual banks. And you know, that will continue. Yeah. I remember years ago working on a regulatory exam with a U.S. regulator, and they said if it's the regulator that's spotting it, it's far too late. Yeah. So, you know, it's really important we treat it like a funnel. Your front line needs to understand the risk and try and prevent as much. Goes down to your second line. We do regular reviews because we're more sophisticated. We should be more sophisticated in terms of our understanding. And then your audit department should be coming in and helping lay that last leg of understanding of the risks that are in place. We are learning when we use new technology, but that's no excuse if there is risk. Now, it doesn't mean that we shouldn't take the chance. We can't be so afraid of trying new technology that we don't go for. But at the same time, you know, we still are accountable if things go wrong.
Right. Well, it sounds like it's working. I think we've seen fantastic progress in Hong Kong over the previous couple of years, and we've seen updates just this week in terms of Hong Kong investing more in, you know, policing financial crime.
Yes, exactly.
I think that was in the news yesterday, which is great news. So we do have a responsibility. It sounds like we're leveraging technology to help reduce financial crime. So, did you have anything else to add before we wrap up? Any final comments? Or?
No, I think, look, it's an exciting time for Hong Kong. I think all of us within the virtual banking industry are very interested in, you know, the developments that we're doing within the bank. But, you know, we're first and foremost, we need to make sure we manage the risk as we launch.
Great, thank you. We can open up to, I don't think we have any more questions on the chat, but if anyone does have one, please submit it now, or we can open up the lines for questions. I think we have a few more minutes. Sorry. Do we have two more? Okay, so do we have Cameron on the line? We have a question relating to behavioural biometrics. Cameron, if you're still on. So a general question, really, just in terms of, I think you touched on this earlier, behavioural biometrics through threat metrics. How should generally virtual banks or other e-commerce companies be leveraging behavioural biometrics to help reduce fraud or decrease friction?
A very good question. I think behavioural biometrics, if you to put it in a traditional bricks and mortar sense, is probably one of the most effective ways of identifying or differentiating person A from person B. The anonymity of the internet certainly brings about, you know, enormous risks and challenges to various businesses, not only from the banking but e-commerce and more broadly. So, but as you say, I think the uniqueness that behavioural biometrics can bring also brings about an opportunity to be able to differentiate when, or rather better differentiate when a good customer is performing how they would normally perform. So for example, you know, how a customer would interact with a login screen and how they would use their, either they would enter their password in, username and password in using a password fill tool, or whether they type it in manually every time. You know, they move their mouse in a particular way, you know, versus someone who is negative, who you know, may be using a list of stolen credentials and just be using copy and paste to log into to the banking scenario. So I think understanding, you know, from how they interact with a page, how long they spend on their page, you know, from things along the lines of on the mobile front, how they hold their phone, is it, you know, and they're not leaving it on a phone farm. So one of those big boards you see with hundreds of devices, and you know, they're running automatic scripts or machines to tap and press various elements on the device itself. So that uniqueness and that unique fingerprint, in addition to the other elements about the device, about the user, I think will bring an enormous layer of, you know, heap of data that is usable for customers or businesses, rather, to be able to make those, or be able to make more informed decisions about whether or not they should allow an event to continue or not. So yeah, I think behavioral biometrics is certainly one of the more broadly used technologies around the globe at the moment. There's a number of players within that space, but I think, as I said, the uniqueness of being able to bring multiple layers of technology in one place, rather than relying on one single platform, or one single, I guess, bullet, if you will, to try and, you know, stop the negative from coming in, I think is you know, the unique differentiator that LexisNexis Risk Solutions can bring to the table.
Great, thanks, Cameron. Just a sort of follow-up question here. Do we see an opportunity to link behavioral biometrics with identifying other kinds of financial crime? For example, identification of sanctions. So I guess that's using location data to identify someone maybe in a jurisdiction that maybe shouldn't be using a provider's products and services.
That's a really good question. I think it would certainly add to the level of data that's available to be able to make that sort of decision. So if you use a case of sanctions breaches or other financial crimes, for example, and I mean, there's elements around, you know, the location, as you mentioned, you know, the type of connection that they're using. But say in the case of behavioral biometrics, you know, they're logging in remotely to a device that's not in a sanctioned country, but they're performing a transaction that could be suspicious in and of itself from a sanctions perspective. Understanding that user or that interaction was performed from a remote location by a remote access tool could certainly add weight to the argument that, you know, there was intent there to perform that type of activity, or there was intent, or there were deliberate attempts to try and obfuscate themselves, so to avoid detection. You know, hopefully, I mean, that would be the kind of thing that you would identify after the fact, in terms of, okay, there was a transaction to this particular entity, and there's, you know, various common elements to that entity, such as, you know, multiple transactions from, you know, various sources around the globe. But yeah, certainly using that type of technology to understand how people may obfuscate themselves and in an attempt to avoid detection would be extremely powerful, I think.
Great. I'm just curious. I mean, for virtual banks here in Hong Kong, will, say, Hong Kong residents who maybe are living overseas be able to open accounts? How is it restricted in any way?
I think it depends on the nature of the license that the virtual bank has been granted from the HKMA. So possible. Okay. You know, we're starting looking at Hong Kong residents. But yes, I mean, you know, some of this information that we collect in terms of if somebody is overseas, and it's really important from a virtual bank to be looking at detection scenarios that will look at IP address, etc., but also partnering with some of the data that's out there, because it's not illegal to use a VPN in most countries. So how do we partner with some of the data providers out there to understand the true VPN? So where is somebody actually, versus when they're using a VPN and saying where they are, and they could show risk indicators.
Absolutely, yeah. We've spoken to a number of times about that sort of concept of proxy PSC and identifying the actual location rather than where the VPN says they're coming from. Interesting. Okay. Okay, another question here, and again, I'll ask you generally, you or Cameron can jump in. It seems very tough to verify the identity of customers at remote account opening. Could you share the best practice for a virtual bank in Hong Kong?
So if you look at verification of using non-face-to-face, it's allowed in Hong Kong through the nature of the virtual banks, and it's being deployed in, this non-face-to-face is being deployed in many markets around the world. Ultimately, the technology that you use, there's different providers out there that can help you understand, if it's a true ID copy, and they may have step-up processes that enhance some of these controls through video calls, et cetera. The main point is it needs to be equivalent. The technology needs to be assessed to be equivalent to a human doing it.
Yeah.
Right? So that ultimately, there are providers out there that can do it. Is it difficult? There's challenges using non-face-to-face, and there's risks inherent in non-face-to-face. Yes, but I think you can mitigate those risks through assessment of the provider that you're using and having very clear step-up factors. And then back to your point about how do you monitor this, and doing appropriate QA to make sure the technology is taking a decision that you would be comfortable taking as well. But I think for inherent in us launching virtual banks, we've been able to solve, or we need to be able to solve for that, right?
And I think honestly there's a strong argument there that technology is often more effective than face-to-face onboarding. I remember several years ago, a friend of mine had moved to Hong Kong. He was set up a small business here and went to open a bank account, and didn't have a Hong Kong ID card at the time, presented a foreign passport, and was able to open an account. But there's a question that how familiar was the person opening an account with the template of that foreign passport? And so I think
there's inherent risk with non-face-to-face, but there's benefits of using biometrics and removing a human from the process. We're all on a spectrum in terms of being able to identify somebody from a picture, right? Some people are very good at it, some people are not. In some banks, the tellers are typically more junior staff. Sometimes people feel the pressure of someone came in, they were dressed really well, they were tall and intimidating, and so they feel that emotional pressure. And technology removes all of that, so that there are real benefits of using technology. But again, I think to the question, there's challenges, and so we need to be smart about it. We can't just place blind reliance on the technology. We need to prove that it is, at a minimum, equivalent to a human.
Okay, fantastic. I think that brings the question. I think we've answered everything on the group here. If there are no further questions on the line, I think we can probably bring this to a close. The line's open. If anyone has a question, please go ahead. Okay, well, thank you to everyone that submitted questions over the group. We had some really good questions here. Thank you, Cameron, for the presentation earlier, and a huge thank you, Wendy, for joining us today.
My pleasure to be here.